Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's unpack this. Welcome to the Deep Dive. It's October 23rd, 2025, and wow, the crypto market today is, well, it's sending some seriously mixed signals.
It really is. It's probably the strangest decoupling we've seen all year, wouldn't you say? You look at the numbers, the overall market cap is down, 3.02%, sitting at $3.72 trillion.
Right, and Bitcoin's dipped below $108,000. Usually that kind of move spells panic, people running for the exits.
Exactly. Then you look at the institutional side, the ETFs.
Totally the opposite. It's staggering. Over the last 24 hours, $618 million flowed into crypto ETFs. Bitcoin led the charge with $477 million, and Ethereum wasn't far behind with $141 million.
So you've got smart money, big institutional players, essentially buying the dip, while the retail sentiment, the fear and greed index, is heading towards extreme fear.
So why? Why this disconnect? What are the big players seeing that maybe the average trader isn't?
Well, based on everything we're seeing, our synthesis suggests they're not really focused on these day-to-day price swings. They're pricing in something much bigger. The massive regulatory and macro shifts that are just around the corner, specifically, they seem to be anticipating probably the most significant embrace of distributed ledger technology, DLT, that we've ever seen from U.S. regulators.
Okay, that definitely sets the stage. So our roadmap for today, we'll dig into this market paradox, really get into that Federal Reserve conference you mentioned.
Which was groundbreaking.
Yeah, then we'll track the global expansion, like what's happening in Asia, and finally touch on the kind of weird political battle shaping up in the New York City mayor's race.
Sounds good. Let's start with that fear gauge. Market sentiment is sitting at 29, classified as fear. That's literally one tick away from extreme fear.
And historically, when you're talking about fixed supply assets like Bitcoin, that extreme fear moment is often seen as Well, some long-term folks call it a gift, right? A chance to buy low.
It can be, yeah.
Yeah.
But we need to look a bit deeper because some underlying metrics suggest there is real selling pressure happening, not just, a temporary blip.
Okay, like what?
Well, look at stablecoin volume. Usually when prices drop sharply, you want to see a huge rush into stablecoins like USDT. People park their money there temporarily.
Right, waiting to redeploy.
Exactly. But USDT volume is only around $168 billion right now. With this kind of price drop, you'd really expect that number to be comfortably over $200 billion.
So the fact that it's not.
It suggests a chunk of investors aren't just parking funds, they're actually converting back to fiat. They're exiting the market, at least for now, not just seeking temporary shelter in stables.
Okay, that's a key distinction. And does the trading activity back that up?
It seems to. Things have definitely cooled off. If you look at volume on decentralized exchanges, the DEX, where a lot of the pure crypto trading happens, it's only $18.59 billion.
It's pretty low.
Yeah, and total value locked, TVL, that's the capital locked up in DeFi protocols, it's also down, sitting at $147.18 billion. Low DEX volume, falling TVL. It points to widespread selling pressure and just, less active trading overall.
We're also seeing that typical flight to quality within crypto, right? Bitcoin's dominance is up a bit.
Slightly, yeah. Bitcoin dominance ticked up to 57.70%, while Ethereum's actually fallen a bit to 12.3%. So, yeah, people seem to be consolidating into Bitcoin, the perceived safest crypto asset in times like these.
Okay, so that's the internal market picture. But you mentioned external factors, too, some big triggers hitting tomorrow, October 24th.
That's right. Two potentially massive ones. First, the geopolitical angle.
The Russia sanctions.
Exactly. Treasury Secretary Scott Bessent announced really strong sanctions are coming down on Russia tomorrow. Apparently, President Trump isn't happy with some recent moves by Putin.
And sanctions, geopolitical tension, that's usually bad news for markets, right?
Almost always, yeah. So we really need to watch how the market reacts to the specifics once they're announced.
And the second trigger, economic data.
Yep, the Consumer Price Index, CPI, inflation data. It's scheduled for tomorrow, although there's some uncertainty because of the government shutdown, whether it'll actually be released on time.
But the early whispers are that inflation might be slowing down.
That seems to be the indication from early reports. And this is likely the bullish signal that those institutions pouring money into ETFs are betting on.
Ah, okay. Because if inflation cools...
It gives Fed Chair Powell and the central bank more breathing room. It opens the door potentially to reducing interest rates down the line.
And lower interest rates historically boost risk assets, like tech stocks and definitely cryptocurrencies.
Precisely. It makes them much more attractive. So that's the potential upside institutions might be positioning for.
Okay, so we've got these big macro events looming. But what gives institutions the confidence, like right now, to drop over $600 million into ETFs amidst the fear? You mentioned that Fed conference earlier this week.
Right. The Federal Reserve Board's Payment Innovation Conference on October 21st. And this is where it gets really interesting. This wasn't some minor event.
No, look at the lineup. Fed Governor Christopher Waller, Kathy Wood from ARK Invest, Sergey Nazarov for Chainlink, Jenny Johnson from Franklin Templeton. These are heavy hitters.
Absolutely. And the key takeaway, the tone set by Governor Waller himself, was it was a complete turnaround for the U.S. central bank's stance.
How so?
He gave explicitly positive remarks. He basically said the Fed is entering a new era, one that actively welcomes decentralized finance, DeFi, and DLT into the mainstream financial system. They actually welcomed the conversation, moving past just skepticism.
Wow. So not just acknowledging it, but welcoming it.
Yeah. And then you had Sergey Nazarov, the Chainlink co-founder, really driving the tech discussion. He immediately pinpointed the biggest practical problem.
Interoperability. Getting different blockchains to talk to each other.
Exactly. He focused on Chainlink's solution, the Cross-Chain Interoperability Protocol, or CCIP. But here's the kicker. He pointed out it's not just theoretical. CCIP is already being used by the U.S. Secretary of Commerce.
Seriously? For what?
For commerce data, apparently across 9 different blockchains. So his point was, look, the plumbing for this cross-chain future, it's already being built and even adopted by parts of the U.S. government.
That's a powerful proof point. Did he talk about trust in regulation?
He did. He really emphasized proof of reserve, making sure crypto tokens are verifiably backed by real assets. And he made a direct plea to Congress.
For what? Clear rules.
Yeah, basically saying, look, we need clear rules and standards, and we need them now. His argument was pretty blunt. If the U.S. doesn't define these standards, it risks losing its competitive edge globally in digital finance.
Makes sense. Okay, what about the future vision? I saw Kathy Wood was there talking about AI and blockchain.
Right. Kathy Wood suggested AI could merge with blockchain for things like autonomous payments. She went as far as calling blockchain the potential backbone for the next internet, specifically for payments and investing.
Strong words. Did we get any sense of how fast this AI integration is actually happening?
We did, and it was kind of stunning. Elisa Hazan from Coinbase shared this operational detail. AI is apparently on track to generate half of Coinbase's code by the end of this year.
Half. Wow, that's incredibly fast.
It really is. Think about the speed that enables. She mentioned it cuts research time dramatically. What might take traditional finance systems 3 days could take half a day. She also highlighted how stablecoins, because of the blockchain's transparency, have built-in features that help fight fraud.
Okay, and tokenization, putting real-world assets on chain, that was another big theme, right? Jenny Johnson from Franklin Templeton.
Yes, and she was very clear. This isn't some future pie-in-the-sky idea. It's happening now. Franklin Templeton is already running money market funds on chain.
So it's live.
It's live. But her warning to the regulators was crucial. She said, look, adoption starts slow, but then it can accelerate incredibly quickly. So we absolutely need clear rules around collateral, liquidity, redemption before these tokenized assets really hit the mainstream.
Like, get the guardrails in place before the floodgates open. But wasn't there a point of friction? Something about reversing transactions.
Yes. That came from Jennifer Butcher at BNY Mellon. And this was probably the most philosophically charged comment of the whole conference. She raised concerns about AI-powered fraud.
Okay, a valid concern.
But then suggested the need for options to potentially undo blockchain transactions.
Undo on a blockchain. That kind of goes against the whole point, doesn't it? Immutability.
Exactly. That's the staggering part. The core idea of public blockchains is that transactions are permanent, irreversible. For a major institutional player like BNY Mellon to even suggest needing an undo button, well, it throws a wrench into the fundamental architecture of DeFi.
It really highlights the tension, doesn't it? Between the need for institutional safety nets and regulatory control versus the whole decentralized, immutable ethos. We should definitely circle back to that.
Absolutely. But before we do, let's quickly look globally. 2 key things happening. First, some significant corporate consolidation.
Okay.
FalconX, which is one of the biggest digital asset prime brokerages, just agreed to acquire 21Shares.
Oh, 21Shares, the European ETP provider. They listed a ton of products recently.
That's them. They're a major player in crypto exchange-traded products in Europe.
So FalconX buying 21Shares. What's the significance there? Why merge those two?
It's all about streamlining institutional access. FalconX provides critical services like market making and liquidity. 21Shares issues the regulated products, the ETFs, and ETPs.
So putting them together allows FalconX to offer a more complete package, from liquidity right through to the listed product.
Exactly. It makes it easier to get regulated digital asset products into the hands of traditional institutions. It's a big validation of that ETF-ETP model for institutional adoption.
Okay, that makes sense. And the other big global news. Right. So this is huge, right? Hong Kong and Solana?
Massive news out of Asia, yeah. The Hong Kong SFC, that's their Securities and Futures Commission, just approved the China ZMC Solana ETF. It's set to start trading October 27th.
Wow. A Solana ETF in Hong Kong.
Yeah.
That's a big step beyond just Bitcoin and Ethereum.
It's huge. It signals real confidence from Hong Kong regulators to expand the range of approved digital assets, even with the, ongoing restrictions from mainland China. It's the city's very first spot fund offering direct exposure to SOL.
And emphasizing spot is key here, isn't it?
Absolutely critical. Unlike futures ETFs, a spot ETF means the fund manager actually has to buy and hold the underlying Solana tokens.
Which creates real buying pressure, real demand for SOL.
Precisely. It provides regulated exposure that's very appealing to both retail and institutional investors across Asia. The fund tracks the CME CF Solana USD index. One important detail, though.
Yeah.
For regulatory simplicity, the ETF provider stated they will not be staking the SOL holdings. So it's pure spot exposure, no staking yield involved for the fund itself. Still a major milestone for altcoin adoption in a key financial hub.
Definitely. Okay, so we've covered the market paradox, the Fed's shift, global expansion. Finally, let's bring it back home, sort of. The New York City mayoral race, that seems like an interesting local battle with potentially bigger implications.
It really is. The election's coming up November 4th. And you've got a really stark contrast in tech and crypto policy between the two main candidates, former Governor Andrew Cuomo and the current frontrunner Zoran Mamdani.
Okay, start with Cuomo. What's his pitch?
Cuomo's running on a platform explicitly designed to make NYC a global hub for emerging tech, specifically calling out crypto, AI, and biotech. He's even proposed creating a chief innovation officer role.
To do what? Cut red tape, attract investment.
Both, yeah. Drive investment, reduce bureaucratic hurdles for these new tech sectors. And it's worth noting, contextually.
His past advisory role with OKX.
Right. He advised them on some legal issues related to U.S. regulations, money laundering laws specifically. So he's clearly familiar with the crypto space and sees an opportunity to leverage policy to attract that industry.
Okay, so Cuomo is leaning in, trying to attract crypto and tech.
Yeah.
What about Mamdani, the current leader?
Mamdani comes at it from a very different angle. He's identified more on the socialist or far left side of the spectrum.
And his stance on crypto, more skeptical.
Much more skeptical, yeah. His campaign has really hammered on the ties between politicians and the crypto industry, framing them as potential conflicts of interest that need cleaning up.
So more regulation, not less.
Definitely calls for stricter regulations. Now, he does support stronger consumer protection, especially around stablecoins, citing past crypto blowups as a reason. But his overall approach is much more focused on government oversight and control.
And how's that playing with the tech community there?
Well, some builders and tech folks in the city see his ideology, sometimes characterized as leaning towards communist principles by critics, as potentially quite negative for the tech sector's growth and innovation in New York. It's a very clear policy divide.
Okay, wow. We've covered a lot of ground today. Market weirdness, huge regulatory shifts, global moves, even local politics. So let's try to synthesize. What does this all mean?
I think we can boil it down to three core themes that emerged. First, that strange market decoupling. Prices down, fear high, but institutional money is flowing in, clearly betting on the future, not the present.
Right, buying the dip based on regulatory hope.
Second, the U.S. financial establishment, spearheaded by the Federal Reserve, has explicitly shifted its tone. They've welcomed DLT and DeFi into the conversation, signaling a major potential change in the regulatory environment is coming.
A huge green light, potentially.
And third, global adoption isn't waiting. We're seeing rapid regulated expansion, especially in Asia, highlighted by that landmark Solana spot ETF approval in Hong Kong. It's not just Bitcoin anymore.
Okay. But that brings us back to that tension point from the Fed conference, right? The immutability question.
Exactly. That's the philosophical crux of this whole transition, I think. You have the U.S. financial system starting to seriously embrace DLT, a technology whose bedrock principle is immutability, permanent records.
But then you have institutional leaders like Jennifer Booker from BNY Mellon already talking about the potential need to undo transactions, likely driven by fears of AI fraud or just the practicalities of traditional finance.
It sets up this fundamental conflict, and this leads to the big question we want to leave you, the listener, with today. If DLT truly is going to become the backbone for the next generation of payments and finance, can it actually keep that core principle? Can it remain immutable, separate from state or institutional override?
Or will the demands of mainstream adoption, the need for safety nets, regulatory controls, things like reversing transactions, will those demands fundamentally change what decentralized actually means in practice?
What level of control will the market, will institutions ultimately demand before they feel truly comfortable building on these systems?
That tension between the decentralized ideal and institutional reality, between security and principle, that's definitely something to keep thinking about, especially as we wait for that CPI data and see how the market reacts to those Russia sanctions tomorrow.
Absolutely. Keep exploring, keep digging. The landscape is shifting faster than ever.